For Bitcoin, the problem is that it's not big enough yet. I mean, when you talk about the size of global oil trade alone, let alone global trade for all goods and services, if you're trying to figure out what unit of account, what settlement medium that you want to do that in, Bitcoin is hundreds of billions of dollars in market capitalization, trillions of dollars in annual uh, transfer volume, whereas the sheer scale you need is many, many trillions. It's still
Right.
small enough that like a corporation or a very, a billionaire can move the price for periods of time. And so I think you need a higher level of adoption and depth of liquidity before that would be interesting on the sovereign settlement and reserve level. Also, if you had higher adoption, you probably would have less volatility. And if you kind of reach the upper end of the total addressable market, it would go up and down more slowly, and therefore you'd have less leverage, less incentive to build leverage on top of it. Kind of like how a lot of people don't go like super levered long gold,
Mhm.
in the way that some people went super levered long, say Bitcoin. And so I think as that settles and as that gets kind of a larger liquidity, larger adoption, that could become more interesting to central banks over time. I would expect it to. But right now it's still early, and a lot of central bankers face career risk. I mean, if they're the one that, convinces people to put a little bit of Bitcoin on their balance sheet and then it has one of its like 80% drawdowns, they're fired.
Bitcoin moved past the $30,000 level for the first time since June 10th, 2022, as March's banking turbulence faded further into the distance and investors grew more optimistic about U.S. central bank monetary policy. Hello and welcome to Money Talks. In today's video, Lyn Alden updates us about the future of Bitcoin adoption and compare it to gold and her thought about de-dollarization.
you know, on one end of the spectrum, you see basically people say, "Oh, this is the end of the dollar. This is it. It's all over now. It's going to be like BRICS currency, yuan, whatever the case may be." The problem with that is many people pointed out that these headlines have been around for like 2 decades. Every time there's kind of an interesting currency deal, you always have these like magazine covers like "end of the dollar" and "this is it," and like this is the end of everything. So
Yeah, well, did you hear Tucker Carlson come out and talk about it the other night on Fox News?
I saw that CNN mentioned it. I saw that Fox had a segment on it. I did think I see that Tucker also did. So I guess Fox now has had two different segments talking about it.
Yeah, I tweeted out that the only thing we need now is to see Matt Damon, Tom Brady, and Jim Cramer talk about it, and then you really got to buy the dollar.
Yeah. So I'm definitely gonna fade that extreme.
Yeah.
Anything that's the idea that things are gonna move very quickly, things like that. On the other hand, I'm also fading the idea the people that are basically saying, "Oh, nothing's changed. We've seen these headlines before. It's totally the same as it's always been." Because there obviously have been certain accelerations that make this particular cycle different than prior cycles.
Yep.
These things do tend to go, and it's so if you look at, for example, obviously the war has been a large impact. The fact that Russia's reserves could be frozen, and they already had ahead of that de-dollarized, but they didn't seem to, expect that their euro assets would be frozen. I guess they didn't think that Europe had the guts to do that, given how much natural gas exposure they had to Russia. So, basically, when countries look around and say, "Wait a second, is that maybe that's not as money as we thought it was? It's more permissioned money. Maybe we should diversify." There are things that have changed. Also, the sheer size of China. People are talking about like, headlines from 2004 or headlines from like, 2008 or whatever of these kind of attempts at de-dollarization. China is rivaling the US in terms of economic size now in many categories. I mean, they're the largest commodity importer. They generate more electricity, they have more skyscrapers. They're the largest trading partner with the majority of countries in the world, which,
Mm.
2 decades ago used to be the United States. There's only a handful of metrics where the United States is still firmly, a larger economic presence. I mean, we're still a larger, obviously, deep water Navy presence. We still have, obviously a larger capital markets, larger a bunch of things like that. But now there's kind of two economies that, depending on what you're looking at, are roughly the same size. And in some areas, one's bigger, in other areas, the other one's bigger. And so there's clearly a gravitational force that gives them some degree of rivalry. Now, they're not, much like the dollar is not really big enough to kind of serve the whole world anymore. It's also true that China's not really big enough to serve the whole world. They have demographics issues. Their capital accounts aren't even open. They don't exactly have a very strong like reputation globally. If you go to a street in a random city, they want dollars, not yuan.
Yeah.
Even though there's been de-dollarization to some extent around the margins at the central bank level, it's not really on the public level, at least not yet. I think the way that we're pointing towards is obviously some degree of multipolar, um, like a multipolar world where reserves are more diversified, payment channels are more diversified. There's obviously better technology now than there was 10 years ago. They're kind of developing these, interlocking CBDCs that can allow, more decentralized exchange, things like that, as well as gold, obviously, is kind of the neutral force. And so, with the combination of all these technologies, even if the dollar is still the unit of account for a lot of things,
Hmm.
out of network effects and convenience, just the sheer fact that you're diversifying both reserves and payment rails changes things quite a bit.
The largest cryptocurrency by market capitalization was recently trading at $30,237, up 6.75% over the last 24 hours. It's clear that the market is pricing a slowdown in growth and, in turn, a loosening of monetary policy by the Federal Reserve over the course of 2023. A check of the bond market shows the U.S. two-year Treasury note has fallen to below 4% from a peak above 5% in early March, as traders rapidly reversed their expectations of future Fed rate hikes. There will likely still be a lot of liquidity injected into the market as a result. Already, Bitcoin has been the best-performing asset of 2023, and it usually is the asset that responds most quickly and violently to these kinds of monetary shifts.
And, the second factor I like to point out is that having one country's currency be the reserve currency of the world is actually quite an anomaly. So a lot of people they see a chart of like, the reserve currency changing every 90 years on average. They see,
Yeah.
okay, before it was the US, and before then it was the UK, and before then it was Netherlands, and before then it was, Spain, whatever the chart goes. The thing that you have to keep in mind is that it's like before the US it was like gold, and before then it was like gold, and before then it was gold, and it's like all these different flavors of gold, or gold and silver, right?
Yeah.
So,
Yeah. Yeah.
you'd have kind of promises to pay for gold. And also, when they talk about reserve currency of the world, they often meant reserve currency of Europe. They weren't. It wasn't. Until you got to the UK, you didn't really have a truly global reserve currency.
Mhm.
It wasn't like the Spain or Netherlands, like their currency was like the dominant currency for like China, for example, if you go back that far. And so, this kind of period ever since Bretton Woods, where the world was devastated, the United States was like over 40% of global GDP. We had almost all the gold. We had our land mass was almost entirely untouched by the war, whereas everybody else, winners and losers, were devastated. We really had, all the cards. We had a chessboard full of queens, and we could kind of set all the rules. Whereas just the return to normalcy brings us out of that anomaly. We've had kind of this, better part of a century of that anomaly slowly kind of returning back to a more normal environment. China's kind of, if you go back long enough, China was a very large percentage of world GDP. So was India, and they went through a period, during colonization, due to a bunch of factors. They had an unusually small share, and in many cases, they're just kind of returning back to the general percentages that they always used to have. And I think we're just kind of returning back to a more diversified baseline economically, and I think that's going to eventually result in more diversified currency exposure as well. Well, so gold if you look back from the 70s until 2008, the central bank holdings of gold were generally diminishing. And at the treasury, the dollar was taking the center stage there. Ever since 2009, you've had like a V-shaped recovery in gold tonnage owned by central banks.
Okay.
We kind of hit peak, like, disregard for gold and going into dollars. I think a lot of countries like, wait a second, maybe the dollar's not quite as bulletproof as we thought it was. Maybe we want to have self custody of something that's a little bit more inflation resistant, more scarce. We fully control it. Obviously, you had certain countries spearhead that more than others, like Russia. They had more of an incentive to want to have their own gold for obvious reasons. And so, ever since 2009, gold's been kind of reasserting somewhat its place in global reserves because it's the one type of money that they can hold in large amounts. They can avoid counterparty risk, and of course the problem is that it's slow and clunky to settle. But for a certain percentage of their reserves, it makes quite a bit of sense. And it's neutral money. So I think as all these other payment arrangements kind of get built, and we'll see where that goes. Gold continues to be one of the most reliable things that they have.
So, what are your thoughts about Lyn Alden's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.